Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and I want to begin with a couple of headlines that caught my attention. One was from yesterday, and the other this morning. And this one here is really a concern. Senate Democrats are circulating plans for a government takeover of the internet. Will they ever fully take it over? Probably not, but the fact that the government, they use the analogy all the time, the anti-government people, the camel's nose underneath the tent. Once that nose gets underneath there, it's hard to keep the camel out. And they are probing ways to monitor the internet. And these companies like Facebook, I'm going to go over the chart of Facebook in a moment. Facebook, Apple, Twitter, with their shadow banning of conservatives, they are inviting government intervention into their businesses. So what may have been far-fetched a while ago is inching closer towards some sort of a reality. I don't think that they'll ever freely admit that the government has taken over the internet. I think that's a little bit of a stretch. But will there be more regulation? I think yes is the word. They'll do it in the name of national security. At least the Dems will. They want to fight fake news. And the Republicans will do it because they're being censored for the most part. And these companies don't even lie about it. I mean, a guy like Alex Jones, who I really don't watch that often, every once in a blue moon I will. I'm not a huge fan. I'll tell you, the fact that they pulled him off of YouTube, here's a guy with about 2.5 million followers, and Google just banned him. Google, of course, being the owner of YouTube. And they're citing hate speech. So these companies, Google included, are really inviting the government into their businesses. This is not an area that I'm a big fan of, especially if the Democrats take over Congress. Now, the other article which caught my eye yesterday was the Petro Yuan futures surge, limit up to record high as U.S. sanctions hit Iran. Remember back in March, you can go back and check for a video I did back in March regarding the launch of the Petro Yuan. I expressed my concerns about it back then. It wouldn't be a big concern up front, but it is growing in popularity because the goal of not only our enemies but our allies is to de-dollarize. So whereas the bite from U.S. sanctions on Iranian oil would have been much harsher only 6 months ago, 8 months ago, because absent a barter for other goods or services, the only way to transact in currency for oil was the petrodollar. That's no longer the case. Now, granted, even with the spike up yesterday using the Petro Yuan, the percentage of transactions performed in or using the Petro Yuan are very small, but growing. And you could expect, as the United States continues to flex its economic muscle, that there will be some fallout which may impact the U.S. dollar. Now, were it not for the ridiculous economic policies of the Japanese and the pretty much incoherent policies of the Europeans, I would think that the dollar would be a lot lower right now. But until those two are resolved, the dollar is still the #1 play in town. I'm going to talk about the dollar in a moment. Now, before we get to the pre-market activity, I'm going to ask you to smash that like button if you could. I appreciate those who have done so in the past. Thank you very much. Click that bell, and you'll receive a notification from YouTube that I posted a new video. If you watch us on the website, enter your email address. We hate spam too. You'll get notified of best stock charts, which I send out on Saturdays, plus you get a couple of free trade tutorials. Let's get to member stock chart request and then the pre-market activity. The first chart up is a member stock chart request, Marriott Inc. We have a stock that at best is in a trading range. We are putting in lower highs and lower lows. We are at critical support, last seen back in July, the first week of July. If this breaks, expect a lot of trouble for Marriott. Now, Stokes putting in lower highs, as is the RSI. So I'm not loving the weekly chart. Now, one could make the case, Bob, it's at a support level. What's wrong with that? Well, nothing's wrong with that. I think that if you wanted to make the case that, you know what, I'm going to put on a small position here, maybe 20 to 25% of my overall intended allotment, but I'm going to use a stop loss right below 124.22 just in case we close down below this support level on a weekly basis. Okay, I'd sign off on that plan. And then I would add more on a breakout above resistance levels. Daily chart. Now, on a daily basis, RSI, which has been putting in lower highs and lower lows, it broke down yesterday below the lower band of support. We are rolling over yet again on Stokes. We flashed a bearish key reversal on price yesterday, but again, we're still holding the July lows. Volume yesterday rose dramatically. So just be careful here and keep a tight stop right below 124.22 if you're going to execute the trade, because the next stop after that is down here at 117.08. The next chart up, weekly chart, canopy growth. We're in an ascending wedge formation, not my favorite formation. We did bounce off of the rising lower band of support. Not much in terms of follow through last week and this week, and the 20-period moving average, which is flattening out, was rising, now flattening out, is acting as resistance. Daily chart. Now, on a daily basis, we are struggling with the 20-day moving average. Stokes are rising. We have both lines on Stokes back above the 50 level. So bulls are beginning to regain the initiative. We did break out above this downtrend channel back here. On the 30th, we pulled back and retested, not once, which is right here, not twice, but 3 times. The last being on the 2nd of August. And we have been limping higher. No breakout yet on these shares above the highs last seen back on August the 1st. If you're going to buy these shares, I would buy on a rally up and through, and a closing basis 26.76. Volume both to the upside and the downside has been weak. So there's not much going on here until, of course, we either break out or break down. One of the two. I wouldn't buy the shares until, of course, we closed above 26.76. Facebook. I already went through my tirade with regard to these Web 2.0 companies, Google included. There's just something wrong with a management of a company that allows their political bias to dictate who has the right of free speech and who does not. They are not taking a high-level view. And that higher level view is this. If they continue down this path of arbitrarily banning people because of their political beliefs and they're one-sided, they are inviting scrutiny by the government. And Facebook has already felt the impact to its earnings because of their pandering to Congress. They hired 10,000 new screeners. That hurt their earnings. And Lord knows how many people pulled back on ad spend because of all the confusion coming out of Facebook and Congress. So let them keep this up, and the share price will suffer. They need to get back to selling ad space rather than focusing on who's politically correct and who's not. Now, this weekly chart, you can see we bounced off the lows of last week, but we're off the highs of this week. I see nothing going on here. No reason to get excited whatsoever. Daily chart. Yesterday, we did follow through off of the prior day's bullish day. We're back above the 200-day moving average, but we flashed a bearish key reversal, and now you have your moving averages going in the exact wrong direction. The 20-day moving average is now down below the 50-day moving average. This is not good. So Facebook, I wouldn't touch this company until they got their act together. Take a look at Twitter. Daily chart. They should be focusing more on not alienating their customers and selling ad space. This is crazy. The next chart up, Best Buy. Weekly chart, no breakout yet, but I think we are going to break out. You have RSI rising, Stokes which are rising, and on a daily chart, we have a breakout. So this looks really good. I really like Best Buy. volume could be better. So let's watch for that weekly breakout. And Best Buy, we may be putting on as a long trade. The GDX, this is the gold mining ETF. This is a stock chart request. We already have a position in the gold mining stocks. We were stopped out of half of our position last week on NUGT. And thank God that we did. Now, the problem for the miners is that the dollar is still strong. You still have a lot of risk-on appetite out there. And when you have a risk-on environment, it makes it a bit more difficult for gold and the miners to rally. They do better in times of fear. Now, on a weekly basis, at current, the week is not over, obviously. It's Wednesday, 3 trading days left to go. It's in the pre-market. We are trading down below this critical support level. If we close down below this lower band of support here, which we've been in a trading range on since the last time we traded below it on a weekly closing basis was back here the week of December the 27th, 2016. That's how long we've been in this trading range, and at current, we are trading down below it. Again, the week is not over. We can still rally back and salvage the week. Now, if we close down below this lower band of support, the next stop is going to be 1991. After that, 1843. So the path of least resistance remains to the downside, unfortunately, for the GDX, and it's picking up some speed. Daily chart. Now, on a daily basis, you have Stokes, which are trading considerably down below the 20 level, but they could stay there, right? We are leaning into the 2 standard deviation Bollinger Band, but we can lean further. The dollar is critical here, and we're going to talk about the dollar in the pre-market in a moment. Down volume has dropped off dramatically on the GDX. So if there's one positive for the GDX, it's the fact that volume to the downside has dropped off dramatically. Let's get to the pre-market activity. All right, so we left off with the GDX, and I mentioned the dollar, so it makes sense to kick things off with the dollar. The dollar is up this morning. The path of least resistance remains higher. This is a 4-hour chart. We have a new weekly high. We broke out an RSI. We have pulled back. We've done a double bottom retest of support. We are now breaking out yet again on RSI. Let's take a look at gold and how it's responding. Gold, which was stronger earlier this morning, is now rolling over, and it is now down. It was up over $2, and it is now weakening. So the path of least resistance appears to be unchanged and to the downside for gold and the miners. Let's take a look at the major averages. The S&P 500. We went into the week bullish. We remain bullish. We have a bull flag formation set up here. And in the pre-market, we are breaking out. RSI looks strong. Now tomorrow, being Thursday, we get the PPI data. That's the Producer Price Index. That's inflation at the producer level. And then on Friday, we get the CPI. That's inflation at the consumer level. Neither one will probably have much of an impact unless you get a strong beat on the numbers. Let's go to the NASDAQ. The NASDAQ, very similar here to the S&P 500 in that we continue to put in higher lows and higher highs. And this morning, we are breaking out yet again. So the path of least resistance for the stock market remains to the upside today. Let's take a look at Bitcoin. I haven't taken a look at Bitcoin in a few days. Not looking good. It appears as though we're going to defend this prior support level here. And it also acted as a launching pad for the rally which began back in early July. So we'll see whether or not that holds. I see no reason to go buying Bitcoin at this point in time because the path of least resistance is definitely to the downside here. So no reason to go buying Bitcoin yet. And that is it for this morning, folks. Everybody have a profitable trading day. And again, if you watch this on YouTube, subscribe to the channel if you would, share with a friend, and leave a comment if you watch this on any social media platform. And if you watch this on the website, again, enter your email address. We'll send you out a couple of free trade tutorials. You'll get best stock charts for the coming week on Saturday. And we hate spam too. You will not be spammed. Everybody have a great day and be well.